Welcome to Skytech-Lens. For decades, Canada and the US built a seamless auto industry, with cars and parts crossing the border multiple times before completion. The Auto Pact of 1965, NAFTA, and USMCA made North America a production powerhouse, supporting hundreds of thousands of jobs. But this harmony is unraveling. New political and economic realities are testing the foundation of this integration. The assumption that what's good for Detroit is good for Windsor is fading, replaced by protectionism and strategic competition. The first major crack, Stellantis, moved Jeep Compass production from Ontario to the US, prompting Ottawa to launch a rare dispute under USMCA. Canada's response signaled a shift, no longer passively accepting production losses, but viewing US moves with suspicion. The stability that once defined the industry has given way to uncertainty and risk. Supply chain instability and unpredictable US trade policy have turned a solid partnership into a source of anxiety. Canada now sees its deep integration with the US as a potential liability, not an unbreakable bond. This realization is prompting a search for new alliances and a more independent industrial path. The era of seamless North American auto cooperation is over. Canada is rethinking its future. The Trump administration's second term unleashed a wave of protectionist trade policies, shaking the global auto sector. In 2025, Washington imposed a 25% tariff on all Canadian and Mexican auto imports, and even USMCA-compliant vehicles faced a 12.5% tariff. This tore up decades of free trade, turning North America into a battleground of economic nationalism. For Canada, which exports 85% of its auto output to the US, these tariffs are an existential threat. Production in Ontario faces becoming unviable, and American consumers are paying thousands more for new vehicles. The global response: swift retaliation. Over 40% of US exports now face retaliatory tariffs. American consumers bear the brunt, shouldering more than half the cost of all tariffs. The strategy meant to protect US jobs is isolating the nation and taxing its own citizens. For Canada, the message is clear. The old rules are gone. The US now sees Canada as a competitor, not a partner. Ottawa must urgently seek new markets and partners to ensure the survival of its auto sector. The reliability of the American market can no longer be taken for granted. Canada is forced to adapt or risk losing its most vital manufacturing industry. US trade walls are isolating the country and deepening its own auto industry crisis. Tariffs, retaliation, and supply chain chaos have forced American automakers to cut production by up to 20,000 vehicles a day. The industry's transition to electric vehicles is stalling as companies delay or scale back EV investments to cope with immediate financial pressures. This hesitation risks ceding ground to international competitors, especially China. The US auto sector, once a global leader, is now on the defensive. New immigration rules, like a $100,000 annual fee for each H-1B visa, are driving away the foreign talent needed for EV and autonomous tech. In September 2025, a raid at a Hyundai LG battery plant in Georgia led to the detention of 300 South Korean engineers, sparking a diplomatic crisis. The incident signaled new political risks for foreign investors in the US. As the US becomes less attractive for investment, Canada is positioning itself as a welcoming alternative. The American auto industry's internal crisis is Canada's opportunity. With the US partnership faltering, Canada is pivoting toward China's booming EV industry. This marks a dramatic shift in Canadian policy, recognizing that the future of autos may be shaped as much in Beijing as in Detroit. The relationship is complicated. Canada imposed 100% tariffs on Chinese EVs in 2024, prompting China to retaliate against Canadian agriculture. But in 2025, a diplomatic thaw at the Apex summit opened the door to renewed cooperation. China restored Canada's travel status and signaled willingness to resolve trade disputes. Now, both sides are exploring deeper economic ties, especially in EVs, where China leads and Canada offers resources and manufacturing strength. Canada has vast reserves of nickel, cobalt, and lithium, key for EV batteries, and a skilled, stable workforce powered by clean energy. For Chinese EV firms seeking a North American base outside US tariffs, Canada is an ideal partner. This alignment of interests is driving Canada's bold pivot eastward. Diversifying partnerships is now seen as essential for securing Canada's automotive future. The stakes and the opportunities are enormous. China's EV industry is a global juggernaut, producing nearly 10 million vehicles a year. more than the US, Europe, and Japan combined. Decades of focused policy and investment have made China the leader in EV technology, battery chemistry, and software. Chinese firms now file 5 times more automotive patents than their US rivals, and their EVs offer longer range and faster charging. China's dominance is built on total supply chain control, from mining to battery manufacturing. This gives Chinese companies a cost advantage and shields them from disruptions. For Canada, direct competition is daunting, but partnership is a different story. By offering resources, skilled labor, and market access, Canada can become indispensable to Chinese EV makers seeking a North American foothold. The opportunity leverages China's strengths while building a new industrial future at home. Prime Minister Mark Carney is rebalancing Canada's foreign policy, reducing reliance on the US by building global partnerships. The auto industry is at the heart of this strategy. At the 2025 ASEAN Summit, Canada expanded energy and trade ties with Southeast Asia, opening new markets for Canadian exports. Canada also renewed cooperation with India, focusing on critical minerals and clean energy, key for the EV supply chain. In August 2025, a landmark clean energy deal with the EU created a $600 billion transatlantic green tech corridor. These moves give Canadian companies preferential access to massive growing markets. Carney's approach positions Canada as a nimble, independent middle power, not just a junior US partner. The global charm offensive is reshaping Canada's economic future. Canada is rebuilding its industrial base to attract global players and secure its future. A $5 billion federal strategy, led by Industry Minister Melanie Joly, targets clean tech, battery metals, and advanced manufacturing. Generous tax credits and incentives are modernizing factories and strengthening the EV supply chain. Ontario is leveraging cheap hydropower and rich mineral deposits to create a fully integrated mines-to-mobility ecosystem. The results are clear. Foreign direct investment surged nearly 9% in Q3 2025, even as global markets wobbled. Canada's unique mix of resources, talent, and stability is drawing global capital. The country is becoming a safe harbor for investment and a rising star in the new industrial landscape. Canada's industrial renaissance is well underway. The North American auto split mirrors a broader divergence between Canada and the US. While Canada builds global bridges, the US turns inward, distracted by domestic issues and protectionism. A diplomatic gaffe at a 2025 summit, President Trump calling Carney President of Canada, symbolized America's waning global focus. As the US alienates allies, Canada's open-for-business approach attracts investment and raises its international profile. For Canada, engaging China is a strategic necessity. In 2024, exports to China topped $30 billion, balancing US protectionism with Chinese opportunity is Canada's central foreign policy challenge. The US bets on isolation, Canada bets on diversification and alliances. The auto industry will be the first big test of which vision wins. Canada's auto industry stands at a crossroads, its old US partnership broken. The question, can Canada become a key North American partner for China's EV giants? The US response will shape the landscape, but a return to old alliances seems unlikely soon. Canadian workers face a complex transition. Future jobs will be in batteries, software, and advanced materials, not just assembly. Success depends on retraining the workforce and sharing the benefits of new investment. Canada is betting it can turn US protectionism and Chinese dominance into a unique opportunity. The fate of an iconic industry, and hundreds of thousands of jobs, hangs in the balance. Thanks for watching. Subscribe the channel for more updates.